Hi friends, this is Akshay Daga, and if you are watching this video, that means you are interested in investing into mutual funds. Before investing into mutual funds, there are some basic things you should know. So I'll uh, talk about those basic things, and I'll show you the demo how you can search mutual funds on the internet and know about it. Basically, how to read it. Okay. So first of all, I'll be covering these topics: what is mutual fund, different types of mutual fund based on risk and return, then different categories of mutual fund, specifically equity mutual fund, then is there any locking period or not, then NAV. These are some basic terms used in mutual fund, that is NAV, entry load, exit load, dividend. And before investing into mutual fund, you should know there are different options available, dividend options available, and then there are different plans. Then there are different ways you can invest into mutual funds. And very basic question, some of you don't know that whether you really need Demat account for mutual fund or not. And at the end, I'll show you how you can go and search mutual fund and how you can read it about basic terms, all basic things. Okay. So first of all, what is mutual fund? So see, mutual fund is a way to invest into stocks, bonds, or money. Basically, you can diversify your investment using mutual fund. Uh, to make it more understandable, I'll give you one example. Consider if you are sick and you want to treat yourself, or you want to get cure. So there are two ways. First way, either you can go and read books and train yourself and try to cure yourself. You can see this option is lengthy, means time consuming and energy consuming. And the second option is you can go to professional, in this case it's doctor, and pay him whatever his fees he asks for, and then he'll take care of your health. Like he will, because he has knowledge, he is expert in that domain, he will apply his knowledge, and he will try to cure you. So as you can understand, that second way is fast and more efficient. So this is the same scenario here. When you invest into there are, when it comes to investment, you can directly invest into stocks, bonds, or money. But the thing is, we don't have that much knowledge where to invest, where not to invest. So the second option is you go to a expert professional, that is fund manager, and he has knowledge of market and which share we can invest into, and which are the share which we should not invest into. So he's like that doctor. So you invest into a mutual fund, and your that mutual fund will be managed by AMC, that is asset management fund, asset management company. There are some examples like Birla Sun Life, DSP BlackRock, HDFC, ICICI, Axis, SBI, L&T, Tata, Kotak, and etc. Many more. These are just examples. So for each and every mutual fund plan, there is one fund manager who manages your fund on your behalf, and he takes his fees. Okay, and all these AMCs are governed by SEBI. So there is governing body to control all these. So after that, there are different types of mutual funds based on returns and risk. When it comes to mutual fund, everyone thinks it is very risky, and once we put money into it, you cannot get back your money whenever you want. So you don't have that freedom, that liquidity. So this is not the case. I'll explain it. So you can see there are four categories of mutual fund here. First one is equity, then debt, then balanced, and money market. So here you can see, uh, for equity, I'll use the cursor. For equity, returns are better, but and returns are always directly proportional. You can see, when we talk about equity mutual fund, that means uh, whatever amount you will be investing into mutual fund, that indirectly gets invested into share market, different stocks, and that's why its returns are high and risk is also high. Similarly, in depth, your amount gets invested into government securities, government bonds. That's why whatever return you get, it is low. That is around 8%, 7 to 9%, maybe 11%, comparable to FD, but better than FD, always better than FD. And risk is also low. There are some balance fund that is combination of equity and debt. So risk and return are medium, and if you invest 100 rupees, then let's say 60 rupees uh, gets invested into stocks and 40% gets invested into government securities. And the fourth category is money market. It is used for, generally used for short term, that is, if you want to invest for very short term, then you can invest into it. Some liquid mutual funds are part of money market, where generally people, what they do, they know on weekend they don't need money for 2 days, and then they invest into mutual fund on Friday and they withdraw it on Monday. So people do mutual funds for 2 days also, 2 to 3 days. This also happens. Many people are not aware of this. In this case, uh, returns is low since it is for short duration. That fund manager cannot take much risk with your funds, with your amount. That's why its return is low, mainly low, low to medium, and risk is also low to medium. So after that, we can get it. So out of all these, we'll talk about equity mutual fund, which is quite famous for its returns, and it has high risk also. So within, if you come into equity mutual fund, there are these categories: large cap, mid cap, small cap, micro or nano cap, and ELSS. So you can see large cap means they invest our amount into bigger companies, like blue chip companies, blue chip stocks, a category stocks. Then mid cap is these are small, means medium companies. Small cap means they invest into small companies. So similarly, as you know, that bigger companies already have completed their growth, like they are in saturation. That's why whatever return you get within equity category, it is lesser, but risk is also very less. In mid cap, risk and return are moderate. For small cap, returns are high, but risk is high since the company is small. And cap and nano cap, it is smaller than small cap, uh, and returns are very high, and risk is also very high. In all these four categories, you don't get any tax benefit, but there is fifth category, that is ELSS, that is equity tax saving mutual funds. Here risk is less, returns are less. It's not actually less. Sometimes in most of the categories, its returns are higher than small cap also. I'll tell you why. And in this case, you get tax benefit, and you can you can invest any amount into it, but you'll get tax benefit up to 1.5 lakhs. Means tax benefit on income tax on amount 1.5 lakh. Okay, but one more important thing about it is it has 3-year locking period from the date of investment. See, whenever you put your amount into a mutual fund, since you don't have any locking period, your fund manager cannot take risk of investing it into uh, opportunity which will take longer duration, because you means you can take out your money at any time. So he has to take care of all those situations, so he cannot take that risk. But in case of ELSS, since fund manager know that once you have invested your amount, you cannot take it back up to 3 years, so he can have long term vision, and he can invest into some opportunities which takes longer duration, and which results into higher returns. So ELSS is very very beneficial. Its return is higher, I must say, and the risk is lesser to moderate, but not much. Okay, once that is done, then after that, see, these are the basic theoretical things. I know these are quite boring, but these are necessary. Then based on locking period, there are two categories, that is open-ended and close-ended. Open-ended means you can sell it at any time, there is no locking duration. Close-ended means there is maturity date provided by fund manager or AMC, and you can sell it after locking period only. You can sell it within that before that maturity date also in secondary market, just like shares, but not directly to AMC. It's one of the example is ALSS, just like I mentioned earlier. After that, there are some basic terms you should understand. First one is NAV, net asset value. So the thing is, it is just like price of share. Since one mutual fund consists of multiple shares, so they decide its NAV. It is similar to price of one unit of mutual fund. So its official definition is NAV is the total asset value per unit of the fund and is calculated by AMC at the end of every business day. At the end of every business day, they calculate NAV and NAV gets updated. Okay, there is entry load and exit load. It is nothing but the uh, charges you have to pay at buying time and at the time of selling the mutual fund respectively. And dividend, see, dividend is the like portion of company's earning, and company decided to distribute between their investor, then you get that dividend. So and you have to select what to do with your dividend, like at the time of at the time of investment only you have to decide uh, what you have to do with that dividend. So based on that, you have three options, that is dividend, dividend reinvestment and growth. At the time of investment you have to select one of these. If you select dividend, then whatever amount you get as a dividend, that gets transferred to your bank automatically in the form of cash. If you select dividend reinvestment, that means your dividend gets reinvested in the same plan. Means whatever amount, let's say you have invested 10,000 in mutual fund and you got dividend of rupees 200, then uh, mutual same mutual fund, whatever quantities you can get in that 200 rupees, those quantity will be bought automatically. So your number of quantities will increase. And if you select growth, then your dividend gets invested into same mutual fund plan again, but here your quantities will not increase. Its NAV will get adjusted. Means the price of each fund will get adjusted. Uh, my opinion is growth option is very very good. You get compounding effect here. In case of dividend reinvestment and growth, you get compounding effect. That is, whenever you get dividend in the form of cash in first category, generally people don't invest it, or it is not possible for us to do it all the time. So you get a dividend on dividend over the long period of duration. So but the thing is, if your mutual fund is of close ended type, it has some locking just like ELSS. And if you select reinvestment option, let's say I have invested it into ALSS today, and after 1 year I and I have selected dividend reinvestment option, and after 1 year I get some dividend and it gets reinvested, then for selling those quantities I have to wait for 3 more years from the date I got that dividend. So and that doesn't happen in this growth option. So growth option is better because it has compounding effect. It depends, for different people different options are suitable. Next is, this is very very important, many people don't know about this. See, when you invest your amount into mutual fund, earlier there was only one plan, regular plan. You can invest into mutual fund through Demat account or through some other options. There are some broking firms in the market through which generally people invest into mutual fund. So as I explained earlier, your fund is managed by fund manager and AMC. There is no any role of your broking firm. There is no role at all. But since you are investing into mutual fund through them, they have some commission. So you are throwing your money to broking firm unnecessarily. After 2013, government allowed us to invest directly into mutual fund to AMC without any third party in between. So if you invest into direct plan, you can save your that commission. And if you check on internet, same mutual fund, same plan, all options are same, selected same. You can see per annum there is 0.5 to 1% return, difference of 0.5% to 1% in returns. Now let's assume you have invested 1 lakh, which is small amount, not that big, and if you check 1% of 1 lakh, so it is around 10,000, I guess, not 10,000, 1,000, sorry. So we'll calculate. See, 1% of 1,000. So you will be throwing 1,000 per year. So it's actually, you means you must be thinking that it is very small amount, but for long term, whenever you think it, there is a huge difference between regular plan return and direct plan return. So always go for direct plan. I'll show you how to uh, distinguish which is regular plan and which is direct plan. Generally, direct, if that mutual fund is of direct plan, it is mentioned over there. Otherwise, if nothing is mentioned, that means by default it is regular plan. Okay. Then there are two ways you can invest into mutual fund. First one is lump sum, that you have some specific amount, bigger amount. Bigger means anything. You can start with 500 rupees or 1000 rupees also. You have amount, you want to invest for one time, that is one time investment. So you can invest it. The other way is SIP. Most people think that SIP, they have invested money into SIP. See, SIP is not investment plan. It is just a method to invest into mutual fund. So it is like your EMI maybe. Each month some amount gets debited from your bank account, and mutual fund means basically mutual funds uh, of that amount gets bought in your Demat account or whatever your mutual fund account is there automatically. It is an automated process. There are some benefits. There are many benefits of SIP. You get benefit of averaging, since in every month you buy some mutual funds. So whatever rate is there in every month, its averaging effects, means its resultant value is like average of all the mutual funds you bought at different time. In lump sum you don't get that benefit. So SIP is always beneficial. Or you can invest manually also in each month, so that is also similar to SIP. Okay. Then the last question, that is Demat really mandatory for mutual fund? The answer is no, it is not mandatory. It is one of the way to invest into mutual fund, but there are other ways also. In my next video I will show you how to invest into direct plan without any extra fees. See, since there is no any benefit to the broker in direct plan, no one is promoting mutual fund direct plans. Okay. There are some companies which are promoting direct plans nowadays, but they have some annual maintenance fees or monthly fees, again which is not any, which is not of any use. why would you pay someone third party to invest into mutual fund? So there are some ways where you can invest into mutual fund direct plan without any extra fee. I'll demonstrate it in my next video. Now I'll show you how to read mutual fund, how to check what plans are available and which one is good and which one is not. So basically go to Google. The very famous site for mutual fund is Money Control. There are many sites, but I'll just show you this. Go to Money Control, go to mutual fund. See, there are these categories: equity, debt, hybrid, money market, and all. In equity, there are large cap, small and mid cap, sorry, small and mid cap, diversified. There are many more other categories. I have whatever I have told you right now. It's about basics, okay, and ELSS also. Now I'll show you how to read it. See, I'll click on this. See, these are different plans, different mutual fund plans. Generally, first name is name of AMC, then after that the name of the plan. Then if equity is written, that means it is of equity category. Then see, here you can see these two are same plans. It is direct, it is regular, and this G means growth, okay. And you can see this is 1 year return. In regular the return is 51.1% and in growth return is 53%. So there is difference of around 2.3%, which is a huge difference. If you do the calculation, it is a huge difference. Similar to that, see, there are some options like, see, this is G means growth, D means dividend. There is dividend reinvestment option. I can't see it right now, but these options are available. Then how to study any mutual fund? I'll click on here this. Okay, see, you can click here investment info. Here you can see this is open-ended scheme, investment plan is growth, then entry load NA, there is no any entry load, but exit load 1%. And here one comment is written. Generally this is true for all the cases. If you sell your mutual fund within 1 year, then you have to pay 1% of your amount. uh, it is some kind of tax you have to pay to government and all other things. And if you pay your mutual fund after 1 year, then you don't have to pay anything. You don't have to pay anything. In that case exit load will be 0. Then you can check dividend history here. This is portfolio, that is if you put some amount into this mutual fund, then your fund manager is putting your money into these shares. You can see the percentage also. These are the basic things how you can read mutual fund. I'll show you one example of ELSS also. You can decide on the basis of last 3 year returns, last 5 year returns, and you can decide in which plan you should invest. See, investment info. This is generally see, whenever we talk about ELSS, it must be written somewhere. You have to, there is locking period of 3 years. it's for sure. I don't know, but you will see this somewhere on this page. Whenever you talk about ELSS, there is locking period of 3 years. I think this is all I can tell you about mutual fund at this moment. This is how you can read different funds, different options, how to check whether it is direct plan or not, how to check whether it is growth option or dividend reinvestment. I hope you understood what mutual fund is, and how to how to read mutual funds. You were watching this video on DumpBox channel, and if you like the way I explained, then please click on like button. If you don't, then click on dislike. If you have any query, any doubt or question, you can put it into comment box. Please share this video to the people who are interested into investing, who are interested in investing into mutual fund. And if you like this video and if you want more videos like this, click on subscribe button. Thank you very much.